Welcome to the Move IQ podcast and First Home Focus series, where we share bespoke advice and guidance if you, like many, are an aspiring first-time buyer. Now, before you apply for a mortgage, preparation is absolutely key. From deposit and maintaining good credit score to gathering the right documentation, planning ahead can significantly boost your chances of getting approved. And today I'm joined by Umera Patel from Skipton Building Society to explore what lenders are looking for from mortgage applicants. So Umera, let's talk about credit, shall we? And credit ratings as well. Talk to me about bad credit to start with.
A good place to start is some examples of what bad credit actually means.
Yeah.
And typically looking at things like missed payments, so if you missed a payment on a credit commitment, historically, what we class as defaults, even things like prior convictions, prior repossessions, and counter-court judgments all would constitute towards having bad credit.
And if you have bad credit, can you still get a mortgage?
I mean, in short, yes, you can, absolutely. There are a few things that you can probably do to increase your chances, which is really important to take into consideration. A credit report gives a lender an insight, a snapshot of what your history is like on managing your monthly payments. Some of the things that you can do to try and help improve your credit is, for example, managing your payments better. At the absolute least, what you would need to do is settle any unpaid payments on your credit report.
Settle them or just manage them and deal with them?
Yeah. I guess if you've got a missed payment, it's really
Yes.
important to have that as what we call a status of settled on your credit report.
Okay.
If you've got a default or you have missed, as an example, like a car payment or like a credit payment, then at the absolute minimum, what you would need to do is pay that.
Yeah.
And then consider building up the rest of your report.
So in essence, you need to be seen to be managing your debt.
Yeah.
And if you're managing it, that's okay.
Yeah, absolutely. Yeah.
Can you explain what a bad credit mortgage is and how that differs from a typical traditional mortgage?
It's a good question. It's not one that first-time buyers ask very often, but it's very important. A bad credit mortgage, as such, is probably one where you wouldn't approach what we call like a typical high street lender. There are other lenders out there who might refer to as subprime lenders. And subprime lenders typically specialise in offering mortgages or support to people who've got bad credit because it's part of their business model.
Yeah.
What you would find in these situations, though, is typically the interest rate that you might get off the back of that is higher for obvious reasons.
Because the lender's taking a higher risk on you.
Exactly, based on your credit history.
Yeah. What would be the typical requirements for somebody who had a bad credit rating be to qualify for a mortgage?
Yeah, I mean, the first thing is if you have a missed payment on any credit commitments, you should ensure that that's paid off in full and that the status on your credit report has been updated to settled.
Yes, that's really important.
Yeah, definitely. The other one that's really important and most lenders do take into consideration is what's the trend on your credit report since some of this bad credit has taken place. So are we on an upward trajectory? Are you managing your payments better off the back of that?
Yeah.
And the other thing is actually that I would encourage is not many people even check their credit report to check that it is right. Sometimes other lenders might get it wrong on your credit report. And so if you do spot a mistake, it's really important to get in touch with the company and get it updated.
So will the different lenders all look at the same credit report?
Yes. Yeah, so as an example, TransUnion is one that a lot of lenders do use. Places like Credit Karma, Experian, etc. also filter through into a similar database which all lenders will have access to. But ultimately, they will all display the same level of information.
Yeah, so you need to be absolutely sure what's up there is up to date and true.
Absolutely. Well, the first thing is to check it, isn't it? I think some people don't even get that far.
And what can people do if they're in this situation? What can they do to improve their credit rating?
Good question. I would say speak to a broker. I think a broker can be really helpful in these circumstances because what a broker will have is experience that you don't. They will have spoken to potentially other customers, other clients who might have been in similar situations. And based on what worked well at that point, they can give you some advice or recommendations on how to plan to increase your credit score.
What about things like getting on the electoral roll and all those sort of associated things that just kind of prove who you are.
Yeah, absolutely. The good thing with things like TransUnion, they give you some pointers on how to increase your credit score, right? Some of which will include registering on the electoral register if you aren't already, and tips on how to manage your payments better overall.
Yeah. And what types of mortgage are available to people with bad credit scores?
I mean, in theory, the same mortgages that would be available to any first-time buyer would be the same for anybody with bad credit. It's just that typically the interest rate might be slightly higher.
Okay. And do you have any thoughts on whether it might be better for somebody to wait until they've improved their credit score, or get on and borrow what you can and pay the rate that you have to?
I do have some thoughts on that, actually. And my view is it's better to plan and wait to get yourself into a situation where you have a better credit score, because it is something ultimately that all lenders take into consideration. And if you are fortunate enough to have that time, then build your credit score, take the time to understand what it is, take the time to understand how to manage it better, speak to a broker, and then get the timing right to put your application in for a mortgage.
Good advice as always. Thank you.
Thanks, Phil.
Thanks for joining us on this episode of Move IQ's First Home Focus podcast. We hope you found our tips and advice helpful. And remember, home ownership may be closer than you think, and we are here to support you every step of the way. So please don't forget to subscribe, rate and review our podcast so you never miss an episode. Until next time.